Of course, we're gonna do this, and we're gonna do this. We're gonna go down to the 1 minute, 1 minute time frame. We're gonna go back, and we're gonna try to find. Before we do that, let's go back as far as we can, so we can find a couple trade ideas. So probably right here, and we're gonna turn it back on. That's basically, yeah. So I guess Silver Bullet already passed for here, so we're gonna wait for the next day. Tomorrow it's basically a Sunday here, so 9:30 again is probable for a Judah swing. A Judah swing is whenever a fake move happens. So we're gonna drop up to the 15-minute chart. 15-minute chart provides us with a lot more context as to what's happening. So we have our area external sell side liquidity, and then we have our external buy side liquidity, and then we have a inversion or a balanced price range, you can say. And you can see what we took out sell side right here, and I don't know if this would be the breaker or this one, but either way it is near a breaker. But order flow is telling us overall we are bearish, and that's kind of, if you zoom out on the chart, you can see we have been more bearish than bullish. So this right here is a Monday to, again, the weekly profile. The high or low can be created during Monday, and then eventually the rest of the week can drop. Again, you won't want to keep that stuff in the back of your mind at all times. And then eventually we're going to drop to the 5-minute chart. 5-minute chart, we have a sell side imbalance there right here. See, we have taken out this area too of liquidity on the buy side, and I want to see how we react to this area right here, this sell side liquidity here. That would be your sell side imbalance. And if we measure the move from up here to down here, this is basically the equilibrium. You can see we consolidated around equilibrium a lot. Either you want to be buying in a premium for shorting, and then you want to be buying in a discount for longing. You never want to buy near equilibrium because you will get stopped out. You can see premium, discount, equilibrium is just consolidation, and you can use that on a higher time frame and you'll find a lot better entries. So we're going to want to see if Silver Bullet is able to provide so again here, this would be your market structure shift, and I want to see if we can continue lower. No. So again, boom, we ran out that external level of liquidity, and it was before the Silver Bullet hour, and you can see we are 9:30 opened. This could be the Judah swing, and okay, so that basically is the Judah swing. All right, so before 10 o'clock approaches, you can use all these little fair value gaps here. You want to mark out majority of the fair value gaps and seeing which one can get respected during that Silver Bullet hour. ICT talks about it doesn't have to be a fair value gap that was created during Silver Bullet. It can be one before, but the entry has to be around Silver Bullet hour. Here, I don't know if it would be probable, but I'm gonna wait to see if we can find a entry during Silver Bullet. So I'm not gonna want to cheat, and yeah, no, we can't find one. So we're gonna wait. Okay, so we are hitting that for the Silver Bullet hour again. Again, you don't want to be entering as soon as you tap the fair value gap. That is a mistake I see some people make. They enter as soon as it taps the fair value gap, and then eventually the fair value gap gets disrespected, and you're gonna want to wait for rejection, because that could happen. This could become an inversion, and price can seek lower prices or higher prices. This would be your market structure shift, boom boom, and this could be an inverse right here, and you can wait for a retracement. So this could have been your trade idea right here, stop at that high, and you could have been targeting this area of liquidity. You're gonna want to wait, boom boom boom, and you can boom, you can see the trade idea was very valid. This is something you have to be in consideration of. Again, what was this time window right here, 950 to 1010? This was a macro. You can see this macro take out, it was taking out some form of a rebalance, and it took out some area of liquidity, these lows down here, this low, but it never took out this external low. And then eventually it retraced. A retracement is likely to occur because we ran all the way down, and you're gonna want to catch what? A sell in a premium, and then a buy in a discount. But I took a sell a little bit below discount, or a little bit below premium, which is it's not bad, I guess. But again, you're gonna want to wait to see if these fair value gaps are getting respected or not. This is a trade idea back testing, I guess. I didn't even look at the daily or the 4 hour to see. You can just zoom out on the 15-minute. That's all you need. You just really need patience. You just need patience. You need confirmation. Confirmation is what? Market structure shift, higher time frame order flow, aligning. And then another confirmation tool you can use is the premium or discount with external levels. So that is pretty much your confirmation tools. You can use little OTE retracement tools. This could be an OTE. Let's see. Optimal trade entry. It is an optimal trade entry. You can see that perfectly fine. You can use OTE, in my opinion. Hit the 62 level and then it dropped. OTE is pretty powerful, in my opinion. It's very powerful. You can use it, or you can just use the premium and discount, seeing which PD arrays are inside of a premium or a discount, and using those. You don't strictly want to go off of the fib levels off of the OTE. You're going to want to have other confluences, of course. This is another thing. You're going to want to see what market environment you're in. If you're in range bound, this is a range bound. You go up and down if you're in consolidation, and then if you're in a trending market environment. So yeah, we are about to take out that extra buy side liquidity up there. And we're going to see, okay, yeah, we're just jumping to the moon. Okay, boom. Broke below these lows right there. They're in the silver bullet. And let's see if we can respect these lows to go higher. If not, then I'm going to seek lower prices, of course. We have a bunch of sell side resting. And we are kind of semi-respecting this fair value up here. This would be a nice fair value up to take a trade off of. We need more confirmation. I need to see a price drop. Okay, we're dropping. So here, you can take the trade. Have your stop loss at the most recent high, and which area of sell side liquidity would you mark? Would you target down there? This would be your area of sell side liquidity. It would kind of be a very skewed risk to reward. Are we gonna get there? Most likely not. So you want to take a little partial, and let's see how the market pans out now. We are ranging again during this time window. You're gonna want to hold the trade, see how it pans out. Boom, boom, boom. And we hit TP1, now we're hitting TP2. Very, very good trade idea. Again, you don't want to have your stop loss very tight, especially during these market conditions where you rally all the way up. Market maker sell model, you take out that form of external high or buy side liquidity. That would be your external buy side liquidity being taken out. That's kind of why I marked it. I was really skeptical if I didn't mark out this one, but we marked out the external. And then you can see this would be your market structure shift. As soon as we close below that, and then eventually price respected this fair value gap, and then we had our stop loss at the most recent high, this short-term high up here. We could have put it at this 3 candle formation of the fair value gap right here, and price still wouldn't have stopped us out, but I just wanted to play it a little bit more safe since our risk to reward was kind of big, so it didn't really bother me too much. But it was a really good trade. You know, you see us respect the fair value gap. Again, we take out that buy side liquidity, and then this would be your market structure shift. And as soon as we saw that drop, you can see prices drop, wanted to drop more. It was just ranging, consolidating, I should say. Not ranging, but it was consolidating. And then eventually we dropped, and then we hit our trade. So this is how you use Silver Bullet Hour. Hopefully you guys enjoyed. And until then, I'll see y'all later. So for Silver Bullet, there's a time window, and basically it's 10 to 11 for New York time. Of course, 2 to 3. This is going to be your AM Silver Bullet, and this is going to be your PM Silver Bullet. I'm going to try to do this not relatively quick, but I'm trying to give you a brief overview as to how I try to trade Silver Bullet. So there's also a macro that is aligned with Silver Bullet, so macro plus Silver Bullet, and one of those macros for before the Silver Bullet starts is 9:50 to 10:10. Oh, 9:50 to 10:10 a.m. And then before that, you have a PM Silver Bullet. So if you can't, macro, if you can't find a trade idea during these macros, you're going to just want to wait for Silver Bullet. Because majority of the time, Silver Bullet, you can't find a trade idea, or you won't find one. And for Silver Bullet, you're going to want to look for a fair value gap entry. So number 1, you're going to want to look for a turtle soup for me. Number 2, fair value gap entry. Number 3, a breaker block entry. Those are the only things I use for entries. And of course, you're going to need what's the most important thing: confirmation, market structure shift, or market structure shift / inversion. So yeah, and then to get to that area, you're going to want to use the 4-hour or daily time frame, and then you're going to want to use a market maker X model, basically a top-down approach, and seeing if you're in a market maker sell model or a market maker buy model. And then after that, you're going to want to be following the order flow. And in my opinion, having more than one chart, more than one window is probably going to help you a lot. You're going to have correlation with NQ and other markets, I guess. So that would pretty much help you if you can have more than one chart instead of sticking to one chart in one time frame. I feel like that it doesn't really, your high probability won't be matched. So